Money earned through investments, properties, or side hustles is referred to as passive income. The idea is to have a consistent cash flow without having to work a full-time job every day. Unlike active income, such as money gained from working at a job or as a contractor, passive income takes little or no daily effort to retain. You can get passive income by investing in specific financial products or developing enterprises that generate revenue without requiring regular labor after an initial investment. The taxes you will pay on passive income may differ depending on where the money came from, so keep meticulous records of your profits. The following are a few of the most prevalent techniques for investors to generate passive income. 1. Stocks that pay dividends. Investing in dividend stocks, which distribute a portion of a company's earnings to investors on a regular basis, such as quarterly, is one approach to generate an income stream. The greatest ones boost their dividend over time, allowing you to increase your future earnings. Dividend equities are less volatile than growth stocks, which helps to diversify your portfolio. Dividends can also be reinvested by investors. 2. Index funds and exchange-traded products that pay dividends. Rather than picking and choosing specific stocks to buy, you can invest in index funds or exchange-traded funds that hold dividend stocks. For people who want a more hands-off approach to investing, this is a type of passive investing. Index funds invest in a diverse range of companies with the goal of replicating the performance of a specific index, such as the S&P 500. A dividend index fund will invest in a group of dividend-paying equities. Because market fluctuations are less volatile across an index compared to individual stocks, index funds can help balance portfolio risk. Dividend ETF combine the diversification benefits of index funds with the convenience of equity trading. If you do not already have one, you will need to open one to invest in dividend stocks, index funds, EPs, and other publicly listed assets. Bonds and bond index funds are the third option. Bonds are a mechanism for investors to lend money to enterprises as well as federal, state, and municipal governments, and get interest income instead of buying shares in the company. Bonds are regarded to be a safer investment than stocks, although they often yield a smaller return. For example, government bonds achieved a compound annual return of 5.5% from 1926 to 2017. According to Morningstar analysis, a significant stock index gained 10.2% within the same time period. Experts recommend putting a portion of your portfolio in bonds because of their reduced volatility and relative safety when compared to equities, and increasing your bond ratio as you get closer to retirement. 4. Savings accounts with high yields. A high-yield online savings account, which might be great for increasing your emergency fund, is another way to make passive income, although at a lesser level than equities and bonds. Savings account interest is credited to your account balance. High-yield accounts are a form of federally insured savings account that pays substantially greater interest than the national average. The annual percentage yield, a PI, of these high-yield accounts may vary significantly, but little variances add up to real money over time, so it pays to browse around for where you deposit your money. 5. Investment properties. Another strategy to generate passive income is to purchase rental properties. Long-term rentals can be a solid source of income if they are located in a strong rental market, but they also come with long-term stressors such as property maintenance, multiple mortgages, property tax payments, and other expenses. You might alternatively concentrate on short-term rentals via a company like Airbnb, which is reliant on a regular stream of visitors to your area. Alternatively, start small by renting out a room in your home to fund your rental property empire. Peer-to-peer lending is a type of peer-to-peer lending. Real estate investments are long-term investments that can provide you with a steady stream of income. Peer-to-peer lending is a strategy to consider if you wish to generate money and cash out your investment in less than 5 years. Peer-to-peer lenders, such as Prosper and Lending Club, provide an alternative to traditional bank loans by matching investors ready to lend money with borrowers who have been screened for creditworthiness by the platforms. It is riskier than placing money in a high-yield savings account or money market fund, but it might produce higher returns, up to 5% or more. 7. Venture capital. Another typical kind of passive income is sponsoring a private firm you believe has the potential to generate future income. This is perhaps the original form of peer-to-peer lending. Private equity funds, which are normally only available to accredited investors who meet certain net worth or income requirements, may be an option for high net worth individuals. Another option is to help a family member, friend, or other trustworthy partner fund their firm in exchange for a share of any future profits. But beware, investing in a single firm, no matter how big or tiny, is fundamentally a dangerous, long-term commitment. Never put more money into something than you can afford to lose. 8. Information. Payments for the use of intellectual property that you have created or for which you have obtained the rights are one option to generate passive income at home. Creating content, especially interesting material that reaches a large enough audience to earn revenue, may be a lot of labor. However, after you have created something that people want, you may make money by employing display advertising, such as Google AdSense, or by running sponsored content, in which firms pay you a fee to publish a post on your blog. Affiliate marketing is another option to monetize a blog, since it allows you to earn commissions if your readers buy a product or service you have recommended or linked to. However, you may discover that developing content is not as simple as you think. There is constantly pressure to add new information or update what you already have to make it relevant. Real estate investment trusts, REITs, are a type of REIT that invest REITs. REITs may be the answer if you want to develop passive income from real estate without the hassle and expense, not to mention the large down payment of buying and maintaining properties yourself. REITs are businesses that own commercial real estate, such as office buildings, retail spaces, apartments, and hotels, and are similar to mutual funds. REITs have a reputation for paying big yields, but their complexity and availability vary. Some are listed on stock exchanges, while others aren't. Stick to publicly traded REITs, which you may buy through an internet broker if you are a new investor. Staking cryptocurrency is number 10. Crypto staking is a method of increasing your cryptocurrency holdings by putting them to work verifying activities on a blockchain network. You can be rewarded with more cryptocurrency if you stake a cryptocurrency. For the most part, staking entails entrusting your Bitcoin to someone who keeps track of transactions on the network on which it runs. To protect against fraudulent transmissions, those verifiers must stake some tokens. By entrusting your token's voting power to a competent verifier, you may share in the rewards they gain for doing their job correctly. However, there is a possibility that you will be fined if the verifier you are working with is. Furthermore, staking may require you to commit your holdings for a defined amount of time, which means you will not be able to sell or trade them. It is crucial to note that staking is not available on all cryptocurrencies. For example, staking is not possible on Bitcoin. However, numerous crypto sites provide additional reward schemes, such as lending, that pay interest on cryptocurrencies.